There have been plenty of bad days since the coronavirus infected investors, yet Monday's session felt like a different kettle of fish entirely. Once again, raising the spectre of the financial crisis, the European markets suffered single-day losses not seen since the aftermath of the Lehman Brothers collapse. Essentially, it's the equivalent of holding toilet roll and tinned beans. People are scared. Rather than giving investors a chance to cool down, a weekend full of alarming headlines only stoked the fires of panic. Italy is potentially planning to place 16 million people under quarantine. France has banned gatherings that exceed 1,000 people. The UK saw its third death from the illness, and the number of cases in the US has hit 500. Most damagingly, Saudi Arabia and Russia have shown a complete unwillingness to work together in the time of crisis. Unable to reach an agreement regarding an oil production cut, the Saudis slashed crude prices by their most in at least 20 years, whilst preparing to ramp up its output, setting the scene for an all-out price war with Putin's superpower. Unsurprisingly, this caused investors to flee Brent crude, with the black stuff tumbling 21% to just under $35.60 per barrel. For context, at the start of March, it was trading at $70 per barrel. This had dire consequences for the commodity-heavy FTSE, with BP and Shell sinking more than 20% apiece. The UK index shed 560 points, plunging to 5,900 for the first time in 4 years. And the Dow Jones isn't immune either, thanks to the heavy presence of Chevron and ExxonMobil. At present, it's hard to tell where any relief will come from, other than investors simply deciding that the markets have fallen far enough to become an attractive proposition, despite the global uncertainty and threat of a recession. Various interventions by the world's central banks, including an impromptu rate cut from the Federal Reserve, have garnered mixed results. While investors are desperate to see these attempts at stimulus, their sudden nature has only served to underscore the seriousness of the situation. And for something like the ECB, which meets on Thursday in the first pre-scheduled central bank get-together since the crisis began, things are even trickier thanks to the fact it is already sitting with record low interest rates. In terms of what could make things worse, well, a pandemic is yet to officially be declared by the World Health Organization, though it's unclear at this point whether or not that's been sufficiently priced in already. A sharp rise in the death toll in the US would likely be felt market-wide, ditto any further outbreaks akin to those seen in Italy, Iran and South Korea in any other countries. Another round of company warnings would also further undermine sentiment, as sectors beyond those immediately impacted, like the heavy-hit travel and commodity sectors, start to assess the cost of the crisis. The real situation has now become one of the defining aspects of the crisis. If bridges have truly been burned between Saudi Arabia and Russia, that's going to be a real problem for investors in the weeks ahead, with Brent crude facing a particularly tough time of it. On the other hand, the drastic drop in the price of Brent crude, if that continues, then Russia and Saudi Arabia might be forced to come back to the table. I think it's really important for the health of the markets in the coming days and weeks how those two major oil producers act and whether or not they can reach some kind of agreement, or whether that is it and they're out now completely out for themselves.